Okay, good evening, guys. Ken of Tortoise Capital. This is the nightly strategy podcast for April 15th, 2020. I've already posted the daily reports and the closure report and the speed run for the swing portfolio video on Patreon, so that's already available. I'm uploading a higher definition version of that. It's going to take a while for that to get uploaded, but the one that's there is viewable. It just it wasn't in Super HD, so I'm going to try to upload a separate one that gives us better fidelity. There's a lot of good lessons learned in that one because we're at a moment in the swing trade portfolio where there's a lot of critical states in both directions. That there have been some nice directional moves, and then those were exited over the last couple days. And today was the kind of a day that set a lot of those up for success in either direction. And so I go through about 20 or 30 minutes of trade framing that I believe are worthwhile if you are in the sound of my voice and you are a swing trader. I think that's a very valuable lesson. So I wanted to get that out earlier and then just make that known so you can check it out. So let's start with where we were yesterday. Remember yesterday we said that the two previous days had done a high and then pulled back, and we said, oh, there's a critical state, and if it could take out the 2-day high and then get through this green line, then it could really run. And then yesterday it opened, got right to the boundary of the river, and then pulled back a little bit. And so we said, well, that's another critical state, that if it rejects this support level, which was the 10-day high and the edge of the river, then the downside trade is challenging because we're still in a bear normal. We've had two good legs up, 1 and 2, and the length of the second leg is now the length of the first leg. So this would be a natural place for it to pause and then pull back. And then if it pulled back, we looked at support levels like Monday's open, the daily low, the 2-day low, and the edge of the river, or the edge of the dragon, I should say, the Bollinger Band mean, the bottom of the river, or the bottom of the dragon, I should say. We said that was very important support level. So that's what yesterday looked like. And then we laid out the support levels on the way down, and then the support levels, resistance levels, targets on the way up. And we noted that we had just entered the summer, which gives us a positive bias, but we respected the fact that risk Z had become more volatile, and so we're at the end of a strong run, and the fact that we were bearish normal kind of was a counterweight. So that's what put us in a really critical state going into today. So that leads us to today's price action, and what we had was a big purple blob right in the middle. So what we had was we had a gap down, a run up, a sell off, and then it closed basically in another doji, just about where it opened. It was still a relatively small range day, and so I take that as the first or maybe the second rejection of that 10-day high, and that failure to get through it. So I mean, yesterday's high was a new 10-day high, so this is really the first day that it tried to break through and it couldn't. And now you see the RL10 has sort of reached a peak. And if it starts to pull back here, then that RL10 is going to roll over, much the same way that it rolled over here. And when that rolled over, price pulled back for 3 days. Then we got the second leg up. So we're right at another potential turning point. So I can make a strong case why this could be a turning point. And all the indicators are suggesting that we're in a critical state. So where we are now is that we've closed right by Monday's opening. That blue line should be up here. I moved it out of the way to draw the box, and I forgot to put it back. So we closed right at Monday's opening. So the goodness from yesterday we gave back today. And now we're at a moment of maximum indecision. We've completed 2 legs up. We've had a 33% move off the bottom. We still have 20% to go to get back to the top. We're at the end of a two leg move. We're at the boundary of the river. The reversion to the mean would be the least surprising move of all, which would bring it back to about 262, which is a $15 retracement from this price level. It's $15 from here back down to the Bollinger Band mean. So that's considerable. So the support levels on the way down that would fire would be the daily low, the edge of the river, the Bollinger Band mean, the southern skin of the dragon. That's the significant one at 260. That's got to hold. Otherwise, this whole leg has been negated. And then the first leg up, that first panic bounce off the bottom, is then put in jeopardy. And remember, most of that momentum came from about 3 big days of unlimited Fed liquidity. Everything else has been kind of grinding, So this is a bear normal market that is fragile, especially since all the buyers, many of them have already made their money and are now not as hungry. So there's a bunch of buyers that are playing defense. And where are the new buyers that are going to come in the middle of a bear market and continue to push this thing back? So there's fewer of them. Because if you weren't already convinced to get in because of this price action that's starting to retrace is not going to convince you of the upside. So this is a very vulnerable psychological state to be in. So that's the price action on the way down. Daily low, edge of the dragon, Bollinger Band mean, southern skin of the dragon, PSAR flip, 10-day low is thick and important, 243. And then the belly of the dragon is important from a weekly basis at 237. Then the belly of the RL10 and the original PSAR flip at 222. And then the absolute spike low there at 220. We moved into the summer today, so we can have a long side bias. And the long side argument is taking out the daily high, the 10-day high, and the edge of the river. Then back to fair value at 304. Z plus 2, the floodplain at 305 and a half. Then the 30-day high at 314 and some change. Then the Z3. Then previous humps of the dragon and the RL10 are these thicker lines further back. So that's sort of the boundary that we're in. We are in a perfect storm of a bear normal market. So when you listen to the swing trade framing speed run portfolio, you're going to hear me say at least 20 times for 20 different trade frames that my intention is to start off the swing trades at the open with chain trading and hybrid frogs, try to get the direction correct by trading in the direction the price is going. And then if it's a strong move, to keep some of that as day one momentum. So market's money is going to fund the overnight swing position. That typically for me will be 1/5 of the position size. So I'll cash 80% of it, use some of that money to fund the overnight risk, and then just keep a residual piece that's paid for with market's money. So that to me is the low risk way to play second day momentum. And I'm ready to do that on 20 different symbols tomorrow, which you'll hear me talk about in that speed run, which is already posted. Okay. So that's my assessment of this market right now. This is, I think, the default market assessment for as long as we are in bear normal conditions. We still got 16 bucks to go to the upside, like about 8%, almost 20 bucks to the upside to get to the 200-day moving average. So we don't even get there until we're up around north of 300, which is basically beyond the floodplain. That's where the 200-day moving average is. Okay. Some other things of interest. Let's look at the whoops, market performances in here. So the S&P was down 2.1% today. It's still in daily summer. The Dow was slightly better at minus 1.9, Wheaton at minus 1.5. Silver in Japan was only down 1%, Apple down 0.9, healthcare only down 0.5, Walmart down 0.4. So that tells you people were buying Apple and healthcare and Walmart even while the market was going down because they didn't lose as much. What they lost was the residual um, market losses, but somebody was actually buying those symbols, which helped offset the losses. And then to the positive side, there were only a handful, but it was Treasuries up 2.5, Tesla up 2.8, so our swing trade is looking good there. Boeing up 3%, recovering from yesterday's smashing. Virgin Galactic, that other speculative high flyer, the space airline, that's Richard Branson, that had a nice day. And then it was the S Dow, that's the inverse Dow, the VIX, and then the triple inverse oil all had good days. So the two speculative swing trades, the Virgin Galactic and then Tesla, are both doing pretty well. To the downside, technology, Brazil, and emerging markets were all approximately as bad as the market, a little bit worse. EFA was down 3%. McDonald's, Wynn, real estate all down 3.5 or more. The Russell down 4%, so the speculators cracked today. You can usually count on the Russell being about 1.5 times more volatile than the S&P. Yeah, I can't help that, John. That's just that's a feature of the internet. The recording that you'll get on this doesn't have that same lag. I can't do anything about the internet. If I could, I'd be doing that. So other things worse than the S&P, technology, energy, oil. Mexico got smashed today. Alcoa and Cliff. So those basic infrastructure companies like U.S. Steel, Alcoa, and Cliff Natural Resources all getting crushed. A few other things from the daily report to look at. Just some quick framing. This is from the auto framer. Let me wait for that to come up on your screen. I can see your screen now. So the auto framer, while we're waiting for that to come up on your screen, it should be a table that has mechanical trade information. There you go. So this is the basis for mechanical trading as a strategy. This is a form of swing trade strategy that simply examines trade location and the size of today's move. And so we'll take a look at JP and compares it to the 10-day high and then computes a reward to risk ratio. So I'm going to give one example. JP Morgan has a 10-day high of 104.39. So we're going to call that the I target, or the initial target, is a return to the 10-day high. It had a range risk today of $2, meaning that it had an actual range of $1.80 plus, or $1.90 plus two 5-cent buffers. Says that the range risk is the size of today's risk plus a nickel buffer on either side. So if it opened inside today's range, so tomorrow, if it opens inside today's range and then takes out today's high by 5 cents, then we would buy it automatically and then use today's low minus a nickel as the initial trailing stop. That gives us the range risk. Right now, that's $2. Well, it turns out that the distance from the mechanical entry of 9208 to the 10-day high of 104.39 turns out, and then if we were using $2 as our risk, then there's a 6.2 to 1 reward to risk ratio if it were to just go back to the 10-day high. So everything that's on this list is at least 2 to 1 reward to risk ratio using this mechanical framing data that I'm showing here. And this is based on a purely mechanical entry, 5 cents above today's high, and then using the range risk as the trailing stop, and then using the 10-day high as the reasonable upside swing target. Then the rest of this information gives you the dollars at risk and what the reward value is. So there's $12.31 of reward and $2 of risk, and that computes to 6.2 reward to risk ratio. So all of these are postured to have very favorable swing trade characteristics using those standard templates for swing trade framing. That's a good place to start to find good swing trades that have favorable reward to risk ratios. Now, there may be better reasons to trade them. For instance, financials have been very good. Caterpillar is interesting because it just had an 8% sell-off 2 days ago, and then it underperformed yesterday and underperformed today. So that's like Caterpillar on a deep discount, and that has a 4.8 to 1 reward to risk ratio. So that is attractive. And then some of the other big indexes are all similarly postured, like Asia less Japan, Russell, energy, mid caps, financials, and oil itself. So this is a way to quickly find trades that will look very good on trade framing, and then you can apply the RLCO and hybrid frog chain trading techniques to get well started in these. That's the purpose of this particular setup. The second setup I want to talk about is the squeeze, the daily squeeze. So let me wait for that to come up on your screen. So the idea behind the daily squeeze is that we're looking for symbols that are postured to make a 1-day large pop, a large directional move in either direction. And so the kinds of symbols that behave like that are symbols that have a large average range as a percentage of their price. In other words, their ATR is large. And they have the quality that today's range was small. So you have something that was normally very large, but today had an abnormally small move. So that's like an inside day. I mean, it can be an inside day. So what we do is we take the range risk, which is today's risk, and I'm going to use Oracle as an example here. So Oracle's range risk is 74 cents. That's how its actual range today was 64 cents, but when we add that 10-cent buffer to it, 5 cents on either side, then we get a 74-cent range risk. Well, its range stat is $4.18. And that means that's the maximum reasonable intraday move. So if it opened inside today's range and then took out today's high plus a buffer plus that 5 cents, and then from the open moved a range stat, then it would be a 5.6 to 1 reward to risk ratio. So today's range in Oracle compared to his average range was so small that if it broke out of that range, it's postured to make a very, very good move. So that's called swing trading one day at a time. That little pop is what we mean by the squeeze. This is like a compressed spring ready to make a jump in either direction. So I like looking at this for finding things that are poised to, like, this is like if you had a bag of microwave popcorn and you put it in the microwave, hit play, and then for 45 seconds it doesn't do anything, and then it starts popping at 45 seconds, and then 98% of it is done popping at 90 seconds. So there's a 45-second window in which that popcorn will pop. When you see symbols on this chart, what you're getting is, it's like somebody just handed you a microwave with a bag of popcorn in it and said, hey, I have to go, but here is a microwave, and this popcorn's been cooking for about 40 seconds. So any second now, you're going to start to see these things jumping. So everything that's on this list is ready to break out in either direction and have a much bigger day tomorrow than it had today. How much bigger? Well, Oracle could be 5-1. That's how big it could be. So there's some really interesting symbols on here that fit that category. Oracle, Treasuries, JP Morgan, the US Russell 400 mid caps, the financial sector, XLF, McDonald's, technology, emerging markets, the Russell, Coca-Cola, Brazil. All of these symbols are tightly compressed today. That's almost to the point where it was a market condition. Today was a very tightly compressed range, and the whole market is postured, breathlessly waiting to break out. That's what tomorrow could be like. So when you look at the swing trade speed run and you see me framing a bunch of trades, you will notice that I make my initial entries mechanically on those 5 cents above today's range. And then I look for second, third, and fourth positions, places where, according to the indicators and the Bollinger Bands and regression lines, places where I believe that I can add a second position if it goes through that line. So those are all part of my planning and preparation from swing trades. And then when I'm inside the trade intraday, I can use those lines and those price levels to give me additional confidence on how to act intraday. So that's the daily squeeze. So I wanted to spend a little bit of time on those. Now, here's the next thing that I want to cover. This is an important coaching point. So Lisa is doing great work getting back to basics, and she posted an improved chart today. And in that chart, she did what I asked her to do, and that was to change the indicators to look more like the way we've been using them, to widen the range from top to bottom so more of the price action could be seen, to put 40 bars of price data on there so we could see the context in which the trade is unfolding, and then to put the 4 seasons of MACD histogram on there so we could see what's going on. She did that. And then I told her to move to hourly charts. She did that. Well done. She traded SCO, the triple inverse oil ETF today, perfectly. How good did she trade it? Perfectly. And she posted a trade frame in the chat room. She got back to basics and traded it. How did she trade it? Perfectly. So now what I asked her to do was the following. I said, now I want you to develop a 5-column learning journal form like this, and use this to analyze how you felt about the trade as you were making it. So this is a process map that will find, name, appreciate, explain, and decide what to do about our triggers. And when I say trigger, what I mean is a trigger is some kind of environmental event, some sensory data that comes in, you detect it, and it makes you want to do something. You feel something about that information. It tickles you. It's an itch. It's a smack in the face with a wet fish. It's something that makes you want to act because you have a feeling about it. And then that feeling of wanting to act is an impulse to act. If we're not mindful, if we are simply reactors, then that impulse to act will lead to an action. And the market is wired so that most of our initial impulses are bad for us. That's how the market works. It's sharks feeding on minnows. So what we need to do is put a wedge in between the impulse to act and the act. We want to act intentionally, and we want to act on the basis of a decision that we make from our strong place, from our best self. We want to act intentionally. So here's how we're going to do that. This worksheet is going to help Lisa find, name, appreciate, explain, and decide what to do about our triggers as they emerge from studying our trade. So in the admin and notes, she's just going to put down the name of the trade, the date, and some of that other stuff. She's also going to put a little summary of what she learned as a result of doing this. Now, I don't care if she puts it up in there or she adds a section to the bottom down here. And puts a note sheet down at the bottom. I'm indifferent to that. But in column 1, I want her to simply record. I want her to go through her trade bar by bar, and I want her to record, hey, what did it do? Then, how did I feel? I could have written it. What did it make me feel? But what did I feel? Then, what did I do, if anything? We had to do something. Even if you chose to do nothing, that's a decision. So, what did you do? And then, what happened? After you did what you did, what happened? And then, upon reflection, what do you think about that whole sequence of going from environmental stimulus to sense to respond to results? And in this way, we want to try to see where the emotions were in the trade as it was occurring. And then what did you do about it? What did it make you want to do? Did it make you follow your rule? Did you decide to follow your rules? Did it make you want to change your rules? Did you actually do something to change your rules? Or did you follow your rules? What did you do after you felt your feelings? So my argument is that in between column 2 and column 3, we're going to learn how to separate those two columns and put a wedge in between there. We're going to learn how to put a separation in between those two things. And we're going to say, look, I don't have any control over the things that are on the left-hand side of that. But what it did what it did. How did I feel? Well, I'm a biological creature, and you poke me and I feel things. The feelings are already occurring before I think about it. So it's not like I can control that. But I can decide if I'm going to do anything about it. So what we have to do is put this zone of this wedge of mindfulness in between how I felt and then what I do. And then we can see how it worked and what's the lesson to learn from there. And from that, once she gets through this, she's going to have a series of things that we're going to be able to analyze and figure out what is the source of the feelings. And are those, if I act on the feelings, is that a good thing or a bad thing? Or what can I do about it? And then you can treat this as a science project. And then you don't have to apologize for your feelings or be afraid of them or try to control them. You can just realize that, oh, Just because I'm feeling the feelings doesn't mean that I have to take some other action. In fact, that's why I ask you to program yourself so that at the moment of entry, I want you to experience the 1 hour loss as if you just lost it, so that you can already feel the worst feeling you're ever going to feel from that trade before anything negative happens. I've already lost the money that I was going to risk. Oh, that's not so bad. I can live from that. And then I can just go do what I'm supposed to do according to my rules as I articulated yesterday. So this 5 column learning journal, the sample is on Patreon and also in the chat room. And I'm going to ask her to do that to her SCO trade because she traded it perfectly. I'm going to ask her to record what that's like. I'm going to encourage you to do that if you feel like that's something that will help you manage the emotions in your trade. If you're a human being, I'm going to suggest that this wouldn't hurt. All right, so let's take a look at Lisa's trade. The trustee icon. So she's in SCO. We're on 1 minute. And I'm noticing the RL 270 is rolling up. The PSAR is rolling up. The RL 90 is rolling up. The 90 is over the 270, so that's good. So this is in an uptrend. I notice that the slope of the river and the dragon are both up, and 4 out of the 5 price bars I can see are favorable. So we're okay. She makes an entry here on the basis of reasons. She's going to tell us why. Entered the first position as it was retesting the opening high of the day. So I don't mind that. This is front running the high of the day. So it's getting ready to break out to a new high. I'm going to make the assumption, and I know it's true because of the time of day on this one, that this was early enough in the day that there's still a range stat move that's available to the upside. So I know that there's enough room to the upside that if it breaks out to a new intraday high, that there's still plenty of room for it to go, and there's no resistance overhead today. So she makes her entry. 3 bars in, it starts moving strongly in her direction. The MACD histogram looks favorable down here. It's above the 0 line. She's using the PSAR as her adaptive stop. I like it. Got another bar in our favor. Another one. I will tell you at this point, it wouldn't surprise me or offend me if you just said this was my entry and you took your stop, which was here, and you just moved it to there. I would not be offended by that move. And then what that does is locks in no lose plus dinner for 2. You've had 5 bars in a row in your favor, and the last 3 bars were all strong upward moves. So, and the MACD histogram just got better down here. So that's good. This is where I expect her first emotional response of fear would be. And the earlier Lisa would say, oh, I'm going to exit here. Now, that's not a bad idea, I don't think. I mean, it's understandable. She's continuing to use this PSAR as the exit. But if that triggered an emotion, hey, I felt that and I felt an urge to exit, then what it did is she would, in this bar, on the 7th bar, it had a retracement after 6 bars up in a row. So she would describe it here. And this one, she would say, this is what I felt like doing. This is what I decided to do. And then this is what happened after I did what I did. And then there may be a lesson. It looks to me like she kept her PSAR stop in place. Still in the trade. Adds a second position on a breakout to a new high. So now she's got 2 positions in, and it's better than where I was exiting. So that just happened. So she entered the second position when it went from summer. Oh, that's what it was. This was summer, fall, summer. So this was summer, fall, summer. And so she kind of auto played that correctly, and off she goes. At that one, my nervousness probably has me with the stop here instead of there, like a 2-bar low. I'd put my 2-bar low. Two-bar low, and it is in a doji. On my little feelings worksheet, that makes me feel like that run is done because we've had 1 pause, 2 pause. So I like my stop right there. I'm really proud of her though. How well played was this? Now everything is still favorable. The RL 270 is good. VWAP's rising. She played the MACD histogram just right. I'm out. She's out at when it crosses the dragon. My personal, especially with 2, so that's the difference in that exit strategy. Especially because there's 2 positions in, and you've had a really strong run, and you had a declining range. So you had a range expansion, doji, no new high or a trivial high, a quiet doji, and starting to fail. I'm done there. I'm not waiting for that confirmation, but I don't mind the exit. I understand the exit. It was a PSAR flip and a 1-2-3 exit. The only refinement I might say is, look, this push was beyond Z2. Notice how we're on the outside of the river because of this range excursion. It's like it's at halfway to Z3 and put in a doji and then started to fail. That's enough for me right there, because I like to capture that extra piece, because that extra piece was the size of my initial risk. And so the risk on this is about 20 cents, the size of that circle. And she captured from let's call that about 29.90, and she captured up to 30.65. So that's 75 cents on a 30-cent risk. That's 2.5 R from the first dot and probably 1 R from the second dot. So that's about 3.5 R. If you add in the extra, it's an extra 2 R if you exit where I exited. So that's a really good trade. Really good trade. Perfectly played. So Lisa, your job is to go through the feelings worksheet and start working on the things that what makes you feel feelings, and what are those feelings, and put names to them, and then make decisions. Put a wedge in between how you feel and what you do. Make this an intentional decision based on your best self and your plan, and then tell us what you did and how it worked out, and then what lessons you can learn from that. 1 trade every day. I want you to do that. Oh, I'm sorry, Luke. This was yours. Why did I think this was Lisa's? Oh, well, then you did it okay. You're all right, Luke. It wasn't bad. Why did I think that was Lisa's? Maybe I saw the L. Well, I've given you more feedback than you deserved or asked for, so I'm just going to pay that forward for next month. You're ahead of the game. My attention to detail problem. Okay, so that's Luke's trade. Like I said, Luke's trade. I want to cover. Here's the S&P. There was a question about the S&P 1 minute trading. So here we are in the morning session was kind of choppy. There wasn't much in either direction. Didn't make much. Didn't lose much. As we came into lunch and getting ready to come out of lunch, I noticed we're in a sideways quiet channel. I noticed the Z3 line here and the belly of the dragon down here and the belly of the RL10, and then the VWAP about right in the middle. So that feels kind of like the channel. I wouldn't be offended if you had drawn the blue line from here or from here. Maybe we'll just draw it from the. Let's draw it from there. So I'm going to just draw that line across as a reference point, and then any breakdown below this red line is going to be significant. And then anything, what we will just notice the VWAP acts like a giant magnet for price action. So here we go. S&P. The Z3 lines compress, so that little yellow box says a noticeably tight compression, and this is going to be a 50 cent, 50 or yeah, about 60 cents from Z3 to Z3. Okay, so 60-cent wide. That's 1/3% in the S&P right now. So I notice we have a RL10 belly, a slightly higher low, and I notice that we tempted the summer briefly here, and then it failed back into the winter, made a low, and then recovered a little bit. So this is still early in the life cycle. That feels good. And then when it breaks out higher than the previous two rising highs, let me shrink this so you can see it. So we have a hump to the 10, a second hump. When that gets taken out, that's my entry, and I'm front running the VWAP, which sold off just a little bit. So I'm bring it down. Yeah. So now I'm buying with momentum on this side of fair value as it's getting ready to cross over and go. And so my stop on this one is going to be like right here. So if I just take that across, it looks like an entry at 27.75 and a 50-cent risk. So that's about actually, because I'm entering at the green dot, so that's about a 40-cent risk. That's what our risk was yesterday, by the way, too, 40 cents. So 40-cent risk, it works in my favor. Now, when it makes this little pullback and then takes off again, I raise my stop to here. So the fireman has done his job. It makes a run up, pull back, and then continues. Second position in. Now I'm above the blue line and I feel good. I notice that I'm getting ready to take out that next Z3 excursion line there. So that feels pretty good. And I know that the second position was done on a summer, fall, summer. So that feels good. Correct. In fact, by the time the price is up there, I'm not offended if you bring your stop to break even or something like that. That wouldn't hurt my feelings. And I exit pretty well on a 1, 2, 3 and the RL10 rolling over. So I actually kind of like that exit. I then notice it comes down to the blue line, and what used to be resistance is now support and bumps. And it takes it takes this out right here. So I like that. I like, come on, Kenneth, get this stuff out. So my stop should be like right about here. It moves out nicely. By the time it's moved that far, my stop should be about here. I take a 1, 2, 3 exit after it pushed all the way out to the Z3 lines twice, and then gave me a 1, 2, 3, and then a P1. So I just take that exit. I like that exit. I'm already regretting that I'm not short, but there you are. I notice a low, a high, a low. So we've got like a double bottom in here. So I mark this off as the base. And now when it takes out this RL10, I get long here. I think it's going to test this and then test this. Take a routine exit, make bank. That's at the same price level that it got to before, and then it failed. You know, this price level here is the same price level it exited there. This is almost the same trade. From here to here is basically the same trade as from here to here. How many times a day do you want that move? 100? Okay, 100 times a day I'll do that if I could. Really regretting not, I'm really regretting now that I didn't take this or notice the low, the higher low, and didn't take that. But time, will, pattern, and money, you can only do what you're going to do. Can't get them all. And then how quickly things change. That upward is all erased by the downward move. And now we're into that last hour of the day, which I don't really, that last half an hour, I don't really try to trade that anyway. But notice from the peak of the day, from the high of the day, the maximum excursion away from the VWAP, the difference between the RL10 here and the VWAP there, that's the furthest stretch that it made all day. And when they couldn't hold it any further, collapse in the last hour back to the VWAP. That peak was made at right around 3 o'clock. And then between 3 and 4, all of the work that it put in to make this move, it gave it all back right there. And still, the VWAP was at the highest level that it was all day. That's fine. But, you know, smoke them when you can. So this was about, if this was my risk here, if that's one execution R from here to here, that's about 2.5 R. That's about 1.5. So that's, but it was low risk. And I didn't have the same problems that I had the last 2 days when I was letting things move against me too much. So I felt better about that. So that's that trading lesson. Shifting gears quickly. For those of you in the sound of my voice that are in the advanced hybrid trading workshop, you guys are enrolled now in Talon LMS, and then course 001 is about 20 layouts for the TC 2000 bundle and how to use it. They tend to be about 3 to 5 minutes per layout. Then in order, I want guys taking the boot camp, then the course on self-discovery and identity, that's psychology and eliciting your beliefs. A top-down view of the 37 strategies. Each one's about a paragraph, and it gives you the basic language and concepts that we're using. Then the daily strategy course is essentially all of these nightly podcasts for the last 4 or 5 weeks since I started doing these in the time of the virus. I think it's some of my best work ever. And so that's course number 4. Then there's a course on chain trading and the hybrid frog, which uses that standard pattern that I talked about yesterday, and which you've seen me demonstrating endlessly. Course number 6, 106, is coaching in psychology. 107 is not populated yet, but I'm going to go through the weekend report this weekend in great detail, page by page and section by section, and talk about how to read it, how to use it in more detail than I normally do for the reading of the report. I'm going to do a separate recording that talks about how to use all the elements of it. And then 108 will be all the pages in the daily report and how to generate ideas from it. So I gave 2 examples of that today already, and that was the auto framer, excuse me, and then the pinches, the daily pinch. Okay, so those are there for all the advanced or hybrid frog guys. And if you're already in the LMS, like under the gold or the coaching program, you don't have those, let me just send me a note to remind me to put you in there. I want to make sure you have those too. Okay. Next, I want to look at the last thing I want to do today, just to look at the daily report. Okay, so here we are for, we've already seen the market health check. Let me let the screen catch up. Okay, yeah, you should see the, yeah, here we are. So back on board. So we're still bearish normal. Everything is in neutral for all of the NDX lookbacks. The pullback today puts us all back in the yellow zone here. Risk Z was at a peak, so it would not be unusual to see a pause in the swing trade opportunities. We're 7.5% away from the 200-day moving average. We're still in risk on. No signals in channeling an overreaction. The 10-day max pain still has, it has a couple new members in there. New Core Steel is on there now. And then AXP has moved into the number 1 max pain condition. Winning guys are Microsoft, Merck, Walmart, Johnson & Johnson. Next up from the daily tactical summary, let me let that catch up for you. There we go. Sorry. Yeah, you're right, John. It's about 15 seconds. Damn. So a ton of dojis today, and think back to my earlier comments about the kind of range compression we experienced today. Now, the absence of downward volatility on a selling day is actually a positive thing. So maybe this was just the pause that refreshes. But now you can see a number of symbols that who are the winners and losers. You can see that New Core Steel and Boeing would both be on my hit list. They're high on the auto framer list. They both had dojis. The big breakout today, United Health was at a 115 on the NDX. So let's shift now to the ETF tactical. When we get there, you're going to see basically the same thing, a ton of dojis. Nothing broke out to the high or the low of on any of the look back periods. Treasuries, gold, Japan, and healthcare were the winners today. I still like healthcare for the long run. And that's basically everything I want to cover from the daily report. The other ones I've already showed you from the market health check and um, the pinch and stretch and the auto framer. The last thing that when you get a chance to take a look at is take a look at the multi-time frame NDX summary. You're going to see a lot of things broke down below their 3-day lows. And those were mostly the ones that were already very weak. And what you'll notice is the ones that were predominantly relative strength leaders held up pretty well compared to their 3-day lows. So that should give you some insight about what it means to have relative strength, why there's a certain value in that. 3-day lows are significant when it comes to that. When you take a look at those bright red ones, those are the ones that broke down on that 3-day period. You'll notice the over on the ETFs on the right-hand side, the treasuries, the only thing that broke out at all from the 3-day high. So you'll see me talk about that too in the speed run for the swing trade. So we've been an hour into it. You guys hanging in there really well. Thanks for your kind attention. I'll get this published and hung, and it won't have that same voice to screen lag. That's just part of the internet these days. Okay, so thanks for your kind attention, guys. Hang in there. We'll see you in the chat room.